Yo, what's up, guys? It's 8 o'clock. Let's check the chat. Okay. Okay. So what was our theme this week? I think it's Bitcoin bounce. Bitcoin bounce with a question mark. Okay, will Bitcoin bounce? If we're just talking about Bitcoin is going sideways and bouncing around like Billio. It's going nuts. It's gone sideways for 14 days and 16 hours. That's how sideways it is. I think our last episode was how to trade sideways markets. And my short answer was basically if you're not a seasoned trader, I would recommend you sit out the sideways market because it's a trendless market. In the previous episode, we explained the difference between a trending market and a trendless market. Okay, so a trending market started when we started our Hobby Live episodes, and pretty much every time we made a live stream, it went down, just as expected. And now we've arrived at a point where there is long-term buy support. There's a lot of demand in this area. That is why the drop has stopped, and now we've bounced and we've gone sideways. And some people may argue that, well, this is a symmetrical triangle after going down, so it should continue to go down. Well, that really depends on how you view this, the short-term structure. It really depends, because you could view it as a triangle, or you could view it as, wait, let's size down this window. It's a bit out of place. Okay, so you could, let's have a look how we're doing in the live chat. Okay, so let's get back right to this. Wait, let me just turn this off. Okay, so we've gone sideways for 14 days, and some people would describe this as a triangle, but I would rather describe it as a range, a trading range. So a triangle is, as the name suggests, a triangle. So it's basically a structure that seems to get narrower and narrower as time progresses. So the start of the range is wider and it gets narrower and narrower, which is kind of true, but that's if you include these extreme highs and lows. But if you don't include those extreme highs and lows, this is more of a trading range. So you could see, I put these lines in a different order, and now it seems as though it's just the trading range, isn't it? So the low of this range seems to be at 28,500, and the highs of this range seem to be at 30,700. So we're trading sideways in this range, waiting for a confirmation, a directional confirmation. So as of now, we're totally sideways, and any confirmation, any break of the range is all low confidence, because right now, if we look at the 4-hour time frame, we can see the 4-hour moving averages are completely sideways. So you can see the red line and the blue line, right? They're like, it's almost like a flat double helix. The red line sometimes is above the blue line when the price is going up, and it goes down. And it seems as though the price action has been fast dips and slow climbs, fast dips and slow climbs. A fast dip, slow climb up, fast dip, slow climb up. So in my opinion, the selling, there is definitely selling here, or it could be liquidations. But yeah, I think there's definitely some selling here, and the selling power, the selling volume is being exhausted. Let's have a look at the volume. So if we're looking at the volume, actually it's pretty steady. It's not dwindling, but it's all very low volume stuff. The volume is lower than the drop, obviously lower than the big drop down from 38,000 down to 26,000. That was a high volume drop, and now we're back to this low volume stuff. What can this tell us? Well, we're now in a quiet market. The markets are very quiet, and I don't expect any huge moves either side. So, but I have a personal bias. I believe we are going up. Obviously, there are those who believe we will be going down, and their sort of thinking is that this is a sideways correction after a big drop down, and we're going to continue dropping down. But there's another way of viewing it. We've dipped and we've had a high volume candle, and now we may have reversed. And the trend is now up. So this is a trading range or a triangle after we've already reversed. We're now going up. So what I mean by that is this is the low. This is the low point of this trend, and now we're in an uptrend, but this is a really short bounce followed by a triangle, whatever you want to call it, and then we're going to go back up again. So let me explain that. A lot of people are thinking that this is the trend and we're now forming a triangle and this is going down, right? That's one way of putting it. Another perspective, my perspective, would be we've hit a bottom, we hit a short-term bottom, now we formed a triangle or trading range, and now the trend from here to here is up, right? We've hit a low and now we're going back up. So this is just a really weird trading range that's really, really long and boring, and we're gonna see it go back up. So going back up, I believe we'll see Bitcoin at around 35,000. At the current level, it is still possible for Bitcoin to dip right below the range, meaning we're gonna shake out weak longs. We're going to shake out the people with weak hands. We're going to get the bears really happy, and they'll think, oh, we're gonna drop down. We're going to hit 25,000, 24,000. So if we break this level, I bet a lot of people will short this area, or cut their longs. Okay, so this is a point of a lot of liquidity. And I believe if we do that, it would be a great place to buy a bit of Bitcoin or buy a bit of Ethereum, depending on which coin you want. And talking about Ethereum has had some different price action. It has dumped a bit more than Bitcoin. So what's going on with that? Well, I also have a theory. Okay, so this is the Bitcoin chart. I'll show you guys a chart I'm working on. I call it my fractal chart. So I may need to edit this chart a bit because I accidentally deleted this part. So right about here, I believe we may see Bitcoin go up soon, hit the CME gap. That's the Chicago Mercantile Exchange, and yeah, so there's a trading gap right there, and most gaps are filled. So we'll fill that gap. We'll hit 35K, and 35K is an interesting level because that means we've broken through this trend line, this downward trend line, which is also which also exists in the previous downtrend. So right now, I think we may be forming a fractal. So what is a fractal? A fractal is basically a repeating kind of pattern in nature that repeats itself. So the general theory is that, like, like what would I say? There are some things in nature, like Fibonacci, right? Fibonacci, this Fibonacci spiral. There are things like human behavior during stressful times, during peaceful times. They're generally the same. Like over thousands of years, people have acted the same. It doesn't matter like which culture you're from, as long as you're a human, you're gonna act scared when things are bad. You're gonna act brave when things are good, and that generally kind of makes charts interesting too, because charts are basically human emotions visualized. They're visualized human emotions. So every red candle is people selling, right? Every green candle is people buying. So it's basically human emotion, human market emotion on a chart, and you can see exactly how people go through the emotions. So let's explain this fractal now. The top of the 2021 cycle was in November. So we hit the top in November, we started dropping. So we dropped from the top and then kind of bounced around downwards and then dropped again. And where did I get out? I got out at about 53,500. And then it bounced up again, and then it went down a bit. And going down, this bit going down was very choppy. So in my opinion, now we're in that kind of zone. We're in the chop zone. We're in the chop zone right after the big dip. Right now we're looking at the linear chart, which may skew things a bit. But actually this time, the dip is much bigger than last time, much bigger than 69K to 42K. So that's a really interesting level, right? 69 and then 420, you know? I bet Elon Musk was in on that. Okay, so let's have a look at the log chart. The log chart, from the log chart, you can clearly see from 48K down to 25K, what was a much bigger drop. You can just see the size on the screen, right? You can see the size, how it is just a bigger looking chart. But that's the log chart. So the log chart shows us how much in percentage terms has the market fallen. But in my opinion, this market works better if you look at it in the linear chart, especially in a bear cycle. I've explained why in many of my previous videos. It's just how chartists look at charts. I personally prefer a linear chart for Bitcoin in a bearish cycle. But if we're going up only like a super wave, if we're going to 100K, then I'll definitely look at the log chart. Or if I'm looking at anything with extreme highs and lows, like Bitcoin in 2011, it was below $1, and now it's $30,000. So to put all of this on one chart, you definitely need log. But now we're looking at linear because we're not talking about such a big price difference. I mean, 69K to 25K, we're still in the 5-digit range. So we're not down too badly, aren't we? We're not down too badly. All is good, all is good. Okay, so let's keep calm. And I posted on my Twitter today for people who've not followed my Twitter. I urge you to follow my Twitter. Just search Cryptos Lao Wai, my handle, or you can search my Chinese name or Jimmy. I bet you can find me that way. And I post charts daily on my Twitter. I do Bitcoin and Ethereum posting mostly. And generally I use my Twitter as a way of gauging what the markets, what the retail traders are thinking. And that's quite interesting. Okay, so my, just give my Twitter a follow and that would be great. Thanks for your support, guys. Okay, let's get back right into the charts. Let's have a look how we're doing in the in this. Okay. Lots of people saying hello today, which is good. 5.1K watching. So I'm looking at this. Guys, this is a patented chart. Don't scam me out of this chart. It took me a long time to figure this out. So please don't post this chart as your own. This is now intellectual property of Jimmy. Okay, so please cite me if you use this chart. Give me some credit. That would be great. Thank you. That's what we learn, right? How we learn from people and we give them credit. So that's always good practice. I urge you to do so. Okay, so let's get back into this fractal. So this is a fractal, and every colored circle you're looking at here is, these are areas in the chart where I think there's a similarity, okay? So I've drawn this as a green circle, so that means I think this area here and this area here are similar kind of points on the chart that can be compared and contrasted. Okay, so the next area we talk about is the first drop. So we've dropped, and then we see this kind of choppy price action kind of sloping downwards. And that is exactly what we see here. And even the moving averages are the same. So the moving averages are the daily 20 EMA and the daily 50 EMA. So we see the daily 20 EMA cross below the daily 50 EMA right about here. And we see that happen here too. And what happens is very interesting. Actually. Once the EMA crosses, we see a bounce. We see a bounce towards the EMA. So we see the EMA crosses the 50 MA. This is called a death cross in moving average terms. So we see this cross, and we see the price rebounds towards the crossing point. And here we see the same thing happen. We see the red line cross the blue line, right? Maybe the blue line isn't so visible. Let's just boost its vibrance a bit. Let's give it a thicker line, or maybe something like this. Okay, so we see, oh wait, that's overpowering. That's a bit overpowering. Can't even see the red line anymore. Sorry. Okay, so we see the red line cross the blue line downwards, and then clearly see how the price goes back to the crossing point. So that's the same here, okay? And the price action is also choppy downwards. Choppy downwards is the same, okay? And then we see this pump. Right? We see this sudden up move that looks really bullish. Here we have the same thing. This is when they hiked the rates by 50 basis points, right? Jerome Powell talked, so gave a Fed meeting talk, and we saw like all prices go up. We saw everything go up, and everyone thought, wow, that's the end for the bears, we're going to the moon, and then we dump. So that's exactly where I told you guys we were gonna dump again. So this is the same kind of price action. And then we come to the green square. So this green square, we see the price dumps really, really hard, very, very fast. We spike down low with a like a needle, right? We spike down low very hard, and we bounce. And here we bounce too. And then here we form a trading range, but this trading range is slightly going downhill. So this range is more comparable with Ethereum. We'll talk about Ethereum in a moment, but yeah, remember this. You see how this is also a trading range. So it's just going up, down, up, down, up, down every day. Here we're seeing a similar kind of thing. We may see it go down to maybe 28k, who knows, and then go up. That's going to be the same kind of deal. So we're going to see this range form, and then we're going to see another pump, and this pump will take us just beyond this trend line. So I drew this trend line. Let's change its color, change it to orange, and then we'll make it a line, not a dotted line. Okay, so I've changed the color there. You can see this trend line, right? This downwards trend line. We'll change this too. So there's a similar kind of trend line here. In my eyes, there's a 90% chance that this will happen. I'm really confident that this will happen. But the question is, do we go straight up from here as of right now, or do we dip down to maybe 28k or even 27k, 27.5k and then go up? That I really don't know. So basically what I'm saying is I think the price will rebound either this month or early next month, and we'll see it go back to 35k, where it will form a local top. So here I'm comparing it to here, so you guys can see, right? Then we'll see a bullish wave or a bearish correction wave, whatever you want to call it. So price goes up, we poke through this line, everyone gets bullish, and then we just slow slide down. We don't break this trend line again, but we just slide down it. Okay, so we hit a high and then we start going down, and then we'll hit a new low maybe in July, and that's where we'll go up, and then I think the real uptrend will start in August, and we'll hit our high point maybe in November. So how do I come up with this high point? Well, a few ways. In my opinion, coming up with this isn't that hard. If we look at the log chart, I usually like to draw a parallel channel. So if we count the bottom here at like 23k, and then we pull this channel upwards, the top of the channel is at a staggering 53k. So I think we'll see that level. We'll see 50k again sometime this year, and then we're gonna go down really bad. So in the long term, this I would call this, it's not really a head and shoulders pattern. This is what we call a diamond top. So this looks like a weird juxtaposed diamond. Or you could call it, yeah, in English we call it a diamond top. Okay, so in my opinion, the long term, meaning a whole year basically, we're forming this top. No, actually more than a year. It's already 1 year since we dropped in May, right? Last May. So this May we're still dropping. Seems like May isn't a great month for crypto. And then last year was very similar actually, similar timing. We started going up in July, and we hit our peak at November. So I think this year, timing wise, maybe similar. We may go down in, we may hit the bottom in July and start going up from July to 53K. So what external factors am I considering? I am considering external factors. I don't just look at crypto. Okay. So the stock markets don't seem to do so well these days. Obviously due to the Fed rate hikes, things like that. But I do believe what we'll be seeing later this year are two kinds of things. First of all, we may see the war in Ukraine stop, and that's gonna be a morale boost for the whole world, and that may cause prices to go up. But I'm not predicting what will happen in the future. It's just things that could happen, right? The second thing is I predict the Fed, they're going to give a stimulus check to people with low income soon. So remember in 2020 when COVID struck, the US gave everyone, what was it, $3,000 or $4,000 just in cash. Everyone in the US got that, a stimulus check. And what that does is basically they've debased the currency. They've debased the US dollar, but instead of just printing more money, they give this money to everyone. So everyone has more capital. That's why we saw Bitcoin, Ethereum, all of these speculative assets, risk-on assets go up in value. And there are other things, right? There's housing, right? The rates were so low, right? You borrow money, you don't get charged anything. So housing went up a lot too. And also things like luxury items, luxury watches in particular, because they're scarce. And we've seen Rolexes, Audemars Piguets, Patek Philippe's go up in price by so much. And digital artworks like NFTs, these are all the same things. Because they're scarce, they can be bought and sold very easily, and that is why people poured in a lot of cash into these things, and these things went up, they skyrocketed. So but now the problem is all of these markets are going down. The NFT markets are going down, the watch market's going down. Watches are maybe down, some of them are down like 30-40%. That's a lot, okay, for watches, because they're a bit like NFTs in that there are not so many transactions, right? Because they're physical objects. You have to sell a physical object, not like trading a coin. So they don't drop as fast. But you know, like all of these risk-on assets are taking a tumble, and I think that will kind of slow down towards the autumn, and we'll see a nice pump in the autumn. So my strategy for the coming 1 or 2 months would be to really take a risk-off approach. Don't do anything medium or high risk. Basically take my time to buy the coins I want and be ready for the pump that will come later this year. I do believe something like that will happen. I've just talked about the external factors. Internal factors, Bitcoin is generally a very volatile market. It's a very volatile market. Prices go up and down a lot. So how can we compare this to, say, 2017? Well, it's uncomparable, right? It's you can't really compare it. Like the structure is totally different. But it's worth pointing out that generally after a big dump, there are pumps, right? There are pumps. After a big dump, we saw a big pump here, but obviously the structure here is totally different. But in 2017, we've seen one big drop from 20,000 to 3,000 and one big rise, right? So that was 2019. So it's possible that we've seen a big drop here, and now we'll see a big rise and then a big drop. So similar to that, that would be this, right? Down, up, down. And this is down, up, down. So this is just, you know, cycles, market cycles. And this cycle, I mean, to hit the bottom may take less time, but in my opinion, since we have so many people, so many retail traders, so many traders in NFTs, we may stay at a low level for a longer period of time. So that's my worry. But that's really not a big worry, because that just gives us more time to buy in, right? That's good news. Okay, so let's have a look at Ethereum. Let's have a look at Ethereum. We're now looking at Ethereum versus Tether, which is not a very good chart because Tether took a bashing just as we dipped. So a lot of people weren't filled. Okay, so this is my Ethereum versus dollar chart from Bitfinex. The reason why I'm using Bitfinex is they're trading versus the US dollar, not the USDT. USDT went down in value as we dipped, causing the price of Bitcoin and Ethereum not hit my targets below. So if we look at USDT, right about here, let's have a look. Right about here, there are a few places I'm looking to buy. So in my opinion, oh, wait, let's have a look at the Bitcoin chart again. If we look at Ethereum right here, and we'll have another chart beside Ethereum, and it's Bitcoin. Sorry, I just pulled up the CME chart. Let's try something else. So this is Bitcoin 4 hour, Ethereum 1 day. So we'll switch to Bitcoin 1 day too. Switch to Bitcoin. Okay, there are some similarities here, aren't there? There are lots of similarities. So we've seen a big dump in Ethereum too, right? And now we've seen Ethereum spike down low with a high volume candle. And this is very similar to what Bitcoin was doing in December 2021. So it dumped, Ethereum dumped, and we're seeing this downward choppy range. We're seeing this range. And Ethereum is doing exactly the same thing. It's chopping downwards in this range, and I believe it's very possible for us to start climbing up from here. So it's going to do something similar to what Bitcoin is doing here. So this is BTC. That's BTC, and this is ETH. So I'm viewing this as a similar kind of fractal that's happened on Bitcoin, and it is now maybe happening on Ethereum, because we're seeing this big candle downwards with a spike and a trading range that's kind of slanted downwards. And with Bitcoin, that's the same thing. It's a big dump with a large spike low, and then we're seeing a downward trading range. So that's a similarity that's worth pointing out. Okay, so let's get back into Ethereum. Let's have a look how our live stream is doing. Need meat. BTC buy position. Will the rate increase in the future? Yes, I do believe it's possible that we'll see rate hikes in the future. But I think everyone's poor. Everyone's super poor now. And I think the Fed will likely issue another stimulus soon because Japan is doing it right now. European Union, European countries are doing it right now. They're handing out stimulus checks. So I believe it's possible that we'll see a second round of stimulus checks given out to U.S. citizens with a earning below a certain level, right? Below the average or something. So I do believe that Ethereum will go back to the 22 to 24k range, and I will be looking to short that area. So let's talk about my positions. My positions, I bought Ethereum at 1,810. So at this price, I bought my first Ethereum after shorting it all the way down. I closed my short at the absolute bottom, and then I bought back in. I bought Ethereum, spot Ethereum at this level. And now we're back at this level. So I'm not buying any more because I've already bought at this level. I still have buy orders set for pretty much 1,700, 1,650 and 1,590. So I have these buy orders down here that could fill. I mean, if there's some panic selling, if there's another spike low, why not? That's great news. We can scoop up some cheap Ethereum. But if it doesn't happen, it doesn't really matter because I'm already 50% in. I'm not 50% in Ethereum, but maybe I'm around 35%-ish in Ethereum. And we'll see. And if it doesn't go down, if we see it go up, well, that's great too, right? We can get up to at least 24,000, 2,400, sorry, 2,400, and we can short that level. We can short that level. That level is determined by this trend line here, which most people won't be able to find. So I like that kind of trend line. I like trend lines that are kind of hidden. So I do believe we're gonna go up soon, and we'll hit the 2,400 mark maybe in early June. And once we hit that mark, I bet a lot of people are going to turn bullish. They believe, hey, Jimmy's wrong. We're gonna go straight up. We're gonna form maybe a rising wedge, and then we're gonna break through this level. But I don't think so. I don't think so. I do believe we're just gonna hit 24k and start going down because a lot of people will turn bullish here. One main reason is because that level is exactly where this trend line breaks through, right? We can see if we draw this trend line like this, it breaks through at 24k, and if we go kind of sideways a bit, we have a clear break of the trend line. But if you draw the trend line like this, it's also the case. We break through, and by hitting 24k, a lot of people will turn bullish. They'll buy at 24k, they'll buy again at 22k. They're gonna keep buying, and then we're gonna start going down. So kind of a similar story in Ethereum. So with Ethereum, I do believe we're gonna hit the bottom in July. Similar kind of story. And then in later this year, maybe in November, we may hit like a 35 to 40,000 mark. So 3,500 and 4,000. So that's my range for Ethereum to sell. So my strategy would be to kind of stay out of the choppy range markets, maybe do a bit of trading by buying low, buying below 2000 and selling in the 2400 zone. And then we'll be buying again maybe sometime in July, where prices may hit 1400. 1440, 1400 are good places to buy. As of now, I still have buy orders set below 1700. So you just have to be ready. You have to be ready no matter what happens, because the markets don't care about your positions, guys. So if you're in a position that you're uncomfortable with, maybe you should leverage down, because if you're adding leverage when the markets are going sideways, every time the markets go up, you're going to be happy, but when they go down, you're going to be sad, and you're going to add to your position, and that's not healthy. You need to have a healthy futures position. So in my opinion, if you're going to be buying, you could be buying here, you could be buying 1700, 1590. You could set a bunch of buy orders and see which ones hit. You don't need to have all your orders filled, right? And to short, I think it's too early to short. I see a lot of people on Twitter shorting the markets right at this moment. I think there is just too much bearish sentiment to short. I was short Ethereum from 33,000, no, sorry, 3350, 3,350. I shorted Ethereum at that level. I held all the way down to 1,800, and now I'm officially long. I'm not longing with leverage, but I've bought a lot of spot Ethereum, and I think that's enough. And I would be very happy if it goes up to 2,400, where I can sell all my coins and start shorting again. So if we short at 2,400, that's effectively another drop like this, right? It's a 44% drop. What was the previous drop from there? That was a 50% drop. So similar kind of drop. It's also a big drop worth trading. And I think that's very good. We'll stick to that plan. And you know, when people are bearish, when the markets are not looking good, find ways to cheer up. If you're FOMOing, if you're completely fudded out of the markets, you just want to sell, what you can do is go for a run. You go for a 5K run, you're going to cool down, you're going to calm down. So everything's going to be okay, guys. Please do not adhere to the FUD. There's a lot of FUD out there. There is a lot of FUD on GMT. Let me walk you through GMT. Okay, so these are my buy and sell zones. No need to take notes of that. I believe GMT, we've hit a local bottom. So I bought at around 0.8, 0.8, and I'm still holding on. I bought more at 1.1. So I'm liking GMT. But a lot of people are hating on GMT, which is very interesting, because on the way up, there was no real hate, right? There was no real hate. Everything was like, be cautious of this game. It's going up too much. And like, everyone was liking the vibe. Everyone was making money on the way up. And once it was at the top, GMT was around $4. And we saw some news come out, right? We saw Binance strategically invested in GMT. That was a news feature. And a bunch of GMT use cases, future use cases came out. So people knew what GMT was going to be used for. So that's all good news, right? But it appeared at the top. Why at the top? Well, if you put out good news at the top, people are going to buy the top. And this is how markets make money, right? And then we've gone down. And now when we've hit the bottom, a miraculous thing has happened, right? Everyone's fudding GMT. Everyone's fudding Steppen. What is happening, right? We're down from $4, right? At $4, everyone was saying GMT is the best. We're going to go to the moon. we went up 40x in what was it? A month and a half, right? 40x in a month and a half. Everyone's making a ton of money. Happy days. It was all good news at the top, and now it's all bad news at the bottom. We've gone down 80% in price. We've hit my target. We've hit my target spot on. I predicted that we would drop from $4 to 0.9, and we did. Okay, so we hit our buy target, and now it's trading sideways. It's trading sideways, and the range is like 1.1 to 1.6. It's a wide range, but you know, this kind of coin, it goes up and down a lot. And now it's all bad news. There's a lot of bad news in the Chinese community for STEPN, saying that the STEPN team is based in China. They're based out of Hangzhou or somewhere, and they're being arrested by the police. I mean, there's no evidence that they are being arrested. It's just rumors out there floating, and the rumor mongering is classic in bear markets. So this is exactly what I mean by narrative following price, right? When the price goes up, everyone's happy, no one's footing it. It's all good news. At the top, there was the most good news, but now we've dropped 80%. So let's assume now is the bottom. There's so much FUD out there. First of all, they're saying that GMT is going to go to 0. It's the next lunar. Next of all, they're saying that the team is going to run off with all the money, and they're also saying the team has been arrested in China, right? I mean, the team in China, there may be some team members in China, I don't know, but you know that if there are team members, they're not the main guys. The main guys are in Australia, and there's no way they would extradite these guys to China, and they've done nothing wrong. It's a legitimate product with a legitimate company behind it in Australia, and it's operating worldwide. And furthermore, Chinese cannot legally get this app, right? This app is only listed on foreign app stores. Not necessarily foreign app stores, but non-mainland Chinese app stores. So in mainland China, you cannot get this app. So if you got this app, that is your own problem. It's like it is very similar to blaming Twitter or arresting anyone related to Twitter for Chinese people using Twitter. There are tons of Chinese people using Twitter in China. They just use a VPN and they use Twitter. It's their own their own right to use it, right? They could use it, although VPNs are illegal. Yeah, but you know, it's at their own risk, and Twitter is not responsible for that. So, will a Twitter employee be arrested in China? No, absolutely not. It's nothing to do with them. So, for example, if some of these team members are in China, right? If some of them are in China, their product isn't marketed to Chinese people. And for Chinese people to onboard to this, they need to jump through all sorts of hurdles. Like they have to buy a app store account from an online dealership with maybe a non-mainland Chinese address attached to it. So if you have a Chinese iPhone with a Chinese app store, you're not able to get you're not able to download STEPN. So it's not even available in China. So it's just, it kind of baffles me. But you know, a lot of people are very gullible, and FUD like this does work, as we can see from this dump. This current dump here, I don't think it's not really a big deal, but let's have a look at the structure. I don't think even structurally it is a real dump. We could view that as a triangle, but there's another way of viewing it. That is viewing it as a parallel channel. So if we're viewing it as a channel, we've not even hit the bottom yet. The bottom could be at 1.1. So I'd watch out. I think around 1.1, just above $1 is quite a good place to get in to step in. Obviously, none of this is financial advice, and all of this is my personal analysis. So I think there's definitely some kind of structure here, and you can see how the chart connects to the previous structure up there. I've just realized right now. So there may be something to this theory. Yeah, so I do believe we'll have some good price action coming in the next couple of weeks, and I think it will be mainly bullish because have you realized with this drop, so many people are bearish. It's like being bullish up here, right? Let's have a look at Bitcoin. It's like being bullish every time the price pumps. It's similar, right? Like over here, the price pumps a bit, everyone's happy, dumps a bit, nobody talks, pumps a bit, everyone's happy again. So now, like, everyone's turned into a bear mentality, and every time it dumps, everyone's happy, and everyone's just bashing the bulls for being retarded or something. But you know, no need to blame the analyst. Don't kill the analyst. I'm the analyst, okay? Just use my stuff as a guide, but don't use it as complete financial advice. And obviously, stay off leverage, guys. It's dangerous. So that's about it for today. Will Bitcoin bounce? I do believe so, but we may have a tiny bit to go before we do bounce. So that's all for today. Thank you for tuning in, and we'll see you next week. Bye bye.